Okay, ladies and gentlemen, welcome here. This is Blessed Forex Academy. We make forex simple and profitable. We're building a generation of profitable traders. So this is the second day or the second lesson of the full 5-day forex class. I hope you got this for free because the 5 day is totally free. And this is the number you can use to reach out to us if you have any question. You understand? And this is also our website if you want to check out more about us. So today we're talking about forex basics and applications. We're talking about the apps that you need to trade forex and trade it properly, and also some of the things that you need to understand, the basics that you cannot do without. So let's dive in. So forex apps and basics. So this is some of the apps. Now, you mustn't download all the 3 apps. You must have at least MT4 if you want to have others good and fine. So this is like what they look like. You can simply search on your app store, whether Google Play Store or Apple, okay, whichever app store you make use of, you can just search and you will see these 3 apps. So at least download MT4 for the sake of this training. Okay, so since most persons use Android, I will make use of my screenshot and videos will be from Android, and the difference is really not much. Okay, it's just just a little difference in interface. So if you have any issue, if you are an iPhone user and you don't understand how much when I use screenshots from Android, you can send me a message and I will give you a link, an updated link for iPhone as well. So that being said, now the icons, these are the current icons at the time of making this video. I don't think there will be much difference. I don't think there will be much changes. But whatever be the case, you can simply search, and I'm sure even the updated one will be available for you to download. Okay. So pause this video and download at least MT4 so that you can follow with this. Open your MT4 app and it will look like this. Okay. So the pairs you have might not be arranged this way. Of course, you may even see the same hashtag Brent, hashtag crude. Sometimes you will see you just see difference. So you can simply click on this pencil icon here to edit. Okay, you understand? Or this plus icon to add pairs. So you can delete, you can add. That's pretty simple to do. I also teach you how to use MT4 if you don't get that. But for now, I just want you to see what your MT4 front page looks like so that we'll be on the same page. Today, this class, this training is not to teach you how to use the apps. No, it's just for you to identify them, download them, and be sure you've gotten the right thing. That's all. Now, so maybe you open your MT4 app and it is turning and telling you that it is trying to open a demo account for you automatically. There's no problem. That's because you're launching it for the first time. Within some seconds or minutes to be done. If it takes time, you can uninstall and reinstall, or send me a screenshot on WhatsApp to see what is happening. Okay, but that means this is what you should expect. So let's go. So forex terms to know. These are the forex terms you need to know. Okay, so I'll make it as simple as possible. You understand? I believe some persons understand them, some persons this is their first time, but we'll carry everybody along. I also advise you follow through the training, even if you understand them, because I might touch some things which are not known to some professional traders, because some persons see these terms and they are confused. So we start from pips, something as simple as pips. So when a young person says they've made 100 pips in the market, they made 1,000 pips, 400 and something pips. If you have been following my WhatsApp status, you understand by now that I post the number of pips my students make. So what exactly does it mean? Okay, now I want to relate it to race. When I say someone is running track and field event, you can hear 100 meters race, 200 meters race, 350. Okay, so I don't know if there's 350, but whatever that means is like a measurement. You understand? So we know, okay, you ran 100 meters. So if we are predicting and we say, okay, this market is going to buy, and the market is going to in our favor, for how long? We will not time it because the speed of markets differ. In a volatile market, it can move very fast, going up or down. In a quiet market, it can be moving slowly. You understand? And if you going up there, you can see that this is not as high as this. This can happen in 30 minutes, especially when there's release of news. This can happen in a day. Do you understand? So I'm just simply saying that the speed, you cannot use time for it. We have to use a certain measurement, and that is pips. So pips is just the measurement, okay? Okay, you understand? So usually the market can be 4 or 5 decimal. You understand? It can be 4, 5 decimal. Some pairs can also have 3 decimal, like Japanese pairs, Japanese yen. Okay, they will have 3 decimal. Understand? But it's not difficult. You don't have to calculate all these things. The market does that for you. But in case you want to, I will also teach you how to. Do you understand? So let's use USD for example. So this is what you will see. Now the last one is the pip. And that's the 4th decimal is the pip. Some of them might have like something up here, let's say 6, or it can be 3, or anything up there, 1 to 9. That one will be a pipette. You understand? It will be a pipette. It's not really that important when it comes to calculating what's it called now? Calculating pips. Okay, you understand? So I will show you how to calculate it. So there is what we call base and quoted or counter currency. You understand? So when you see a pair like this, the first one is base currency. I think I mentioned that in the previous lesson. The second one is the quoted currency. What this means is that the base currency always have a value of 1. Okay? You understand? The quoted currency is now the equivalent. That means 1 euros is equal to 1.051 USD, according to what this photo is telling us. Is that clear enough? Let me give you a more common example. Let's say if you're a Nigerian, you should understand this. If you see something like USD NGN, that's Nigerian Naira, the pair is equal to 500 or 501. What it means is that 1 USD is equal to, because USD is the base currency, so it will always have a value of 1. Then this equivalent is the value of the NGN, is equal to 501 Naira. I hope that's clear enough. So that's just based on quoted currency. We'll do an example when we go back to the previous slide. So bid and ask. Now, currency pairs do not just come in one value. It will come in 2 values, the bid and the ask. The bid is the lowest value, the ask is the highest value. So the ask is the price at which you can buy the base currency. The bid is the price at which you can sell it. Okay, let me not just confuse you. It's just like it will come in 2 values. They'll be very close. You understand? They'll be very close. And that is because the market is not actually total. And that's simply because the market is not actually quiet. The market is volatile. The market is moving. Do you understand? So that being said, let's go on. Okay. So so the difference between the bid and the ask price is pips. So sorry for that little disturbance. The difference between the bid and the ask is spread. Okay. So if you do the subtraction, the spread is 2 pips. You understand? The spread is 2 pips. So let's do that subtraction and get it over with. Okay. So of course you have to remove the decimal. So 11053, that's the ask, the biggest minus the smallest, the bid. 11051, the answer is 2. If you do the subtraction, you can do that together with me. So the answer is 2. So that it has a spread of 2 pips. Okay. So that's like how you understand what exactly is going on. Okay. So let's move further. That being said, so I will show you some more example in the previous from this one page. So you can also do that when you open MT4 and check the current price and what exactly the market is saying about it. So so you can see that in this USD, the bid and the ask they are the same thing, so the spread is 0. In this GBP USD, the bid and the ask they are the same thing, so the spread is 0. But let's take USD CHF, they are not the same thing. You understand? 0.88886. That 6 is the pipettes, okay? You understand? You know, I told you it's usually 4 decimal for USD pairs. Pairs that are not JPY, usually 4 decimal. But when it's at the top, this one is at the top, there is a pipette. It's not a pip. The fourth decimal is the pip. This one is a pipette. So 0.888882. You understand now? So you can still go on to do the subtraction and get the value here. Okay. So usually the JPY pairs, they will have what's it called now? They will have only 3 decimals. They will have only 3 decimals. So if we decide to subtract this one, I'm sure you know if you remove the decimal, you get 4, which is the spread. Okay. If you remove for the USD was the same thing. For the odd USD, we are still saying the same thing. Okay, you understand? So so I think we are both on the same level. You understand? I think we are both on the same level. So I'm sure you get this part. So there is actually a more complicated way of doing this subtraction thing where you have to divide by 0.00. But I do not want to walk you through that long process. I really do not see the need to. So after all, this thing is calculated, automatically generated for you. So if you want to enter pairs with no spread, which is why brokers like Light Finance, which are ECM brokers, they are profitable. They are advised to use them. Okay, you understand? They have low spread. You can see how low this spread is. Some spread can be as high as 12, 15 is a disadvantage. Now, spread is like the commission the broker will charge you. You understand? For, as a trader, that is like where they also make their own money from, which they use to like maintain the service they render to you. So of course, you want to go with a broker that has lower spread, that has lower charges. But don't worry, the charge is even insignificant. You understand? So that's that. So the next, we want to talk about lot size. Okay. Now when you place trade, let's say it goes for 100 pips. So you made 100 pips. Okay, this 100 pips, how much is it? You understand? How much is it? That's the next question to be answered. Okay. So you can also quantify the amount based on lot size. You understand? Based on lot size. So lot size, the lowest is 0.01, going to as high as as high as 20 plus, depending on the broker. So but you may never even get to use as high as 20 and the like, except you start trading for companies, hedge funds, and the likes. So, but normally 2 lot size, 5 lot size, you're okay as an individual trader. In fact, we do not advise that much if your capital is not in the thousands of dollars. Okay, so let's go on. So it's just, okay, let me also give a simple example to make you understand lot size properly. If you go to buy meat in the market, they'll tell you that if they say 1 kg of meat is $10. So that means if you want to get 2 kg of meat, you will need $20. You understand? We are taking the kg now to be lot size, okay? To be the measurement in this aspect, okay? So let's say you made 100 pips in the market. Okay, if 1 pip is equal to $1, when you use 1 lot size, 1.0 lot size. Remember I said lot size will start from 0.01 to as high as 20, so you can use 1.0 lot size. You understand? If 1.0 lot size and 1 pip is equal to $1, that means 100 pips will be how much? $100. Yes? Very simple. So let's assume instead of you to use 1 lot size, you now want to use 2 lot size. That means with the same 100 pips, you make $200. You understand? We make $200. Okay? I hope that's like clear enough. You understand? So that's like a very, very simple example. So that's the function of lot size. It is meant to like decide how much you are making per pip. Do you understand? Is to decide how much you are making per pip. You understand? So usually 1.0 lot size, 1 pip will give you $10. If you make 1 pip, that is, if the trade goes in your favor, 1 pip, you will make $10. This is for a standard account. You understand? This is for a standard account, which is like the usual account for trading. I do not want to confuse you with so many things, but just understand that you are not calculating these things yourself. Okay, the broker is doing it for you. MT4 app is doing it for you, the broker too. So it's just for you to place trades. Understanding where to enter is like what we are doing. I just teach these basics so you will not be lost. And so you will understand how to calculate it in terms of risk management and the like. So I hope you are following me. So 1 pip is $1, is $10 when you use 1.0 lot size. So what will it do when you use 2.0 lot size? 1 pip will now be $20. Why? Because the lot size has doubled. So as the lot size will double, the amount you can make will double. If it's reducing, the amount you can make is also reducing. You understand? So also understand that in case the trade is going against you, you'll be losing, you will lose the same amount. You understand? So that you are making $10 on 1 pip when you use 1.0 lot size is simply because the trade is going in your favor. If the trade is going against you, that means you will be losing, it will be minus $10. I hope that's clear enough, okay? So I just want to make this as simple as possible. So you will soon understand how we set the lot size before we place trades and all that. For now, let's just go through the boring aspect of understanding the basics. So leverage. So leverage involves increasing the purchasing power of your capital. So you can use huge lot size. Let's say you start with $100. If you don't have the leverage, you will never be able to use 1.0 lot size. Let me tell you why. For you to use 1.0 lot size, you need to have $100,000 in your account as your capital. But what you have is $100. So how do you increase it? Leverage. You can, while registering on account, which I'll show you how to do, you can tell the broker that you want 1:1,000. Although some brokers don't give this high, but let's assume that's the situation here, 1:1,000 as the leverage. Okay, so that means for every $1, they are multiplying it by 1,000. So that means they'll multiply your $100 by 1,000. That will be $100,000. That will now be the purchasing power of your $100 capital. Of course, what you still see is $100, but for you to place trade, you can now open trade with 1.0 lot size. I think that's clear enough. Why this leverage was introduced was because some persons do not have huge capital to start the market with. So if you don't have huge capital, it does not make sense you starting with $100 and not being able to place trades. You understand? So that's the function of leverage. So your broker can increase the buying power of your capital times 100. That is, if it's 1:100. If it's 1:200, it will be times 200. Okay. So I do not want to bore you with the. So margin is simply the amount you are forced to set aside while you trade or open a position. Okay. And if you open with $100, you understand? Your broker will not, of course, open just one trade with $100. They will set aside some amount that you can use to open future trades, because you might want to place up to 10 trades at the same time. So they need, you understand? So this will also depend on your lot size. Don't use too huge lot size, okay? Else your margin will be reduced. So like I said, you are not the one doing any of this calculation. It's just happening automatically. I just need you to understand that some trainers will avoid it because it's boring. They'll just tell you, oh, go and place it by. No. I want informed students. Okay? So there's also another video after this that you should watch before the day 3 video that will explain some of this things, to show some of these things on your MT4 app so you will understand it. Okay? So equity is the total amount you have in your trading account, adding or subtracting your current trade. Let me give you an example. If you deposit $100 and you place 2 trades, in the first trade you are making plus $20. In the second trade, you are making $30. What do you get? Your balance will still be $100, but your equity will be showing $150. If you are losing, it will subtract it. Okay? You understand? So let's go to something very, very simple. So bearish. When you hear someone say the bears, you understand, or bearish, it means downward trend. Guys, the market is going down. Bullish or bulls means upward trend. The same thing as buy and long. Buy and long means uptrend. To predict an uptrend, you say you are going long, and if you are buying the market. you are buying, you understand. So you are going short, that means you are selling the market, downward trend, you are predicting a downward trend. So let's talk about charts. The chart is simply a visual representation of the currency pair. You understand, over a set period of time. That's why there is time frames on your charts. Okay, so it could be in so many forms: lines, bars, candlesticks. So let's switch to TradingView websites and show you how to locate some of these charts. So this is tradingview.com. Remember, I told you you can also download the app on your phone or use the website. So if you get here, you click on charts. Okay, charts. So you will search for whichever pair you want to. So you can also get charts on MT4. I mean, you can also get charts on MT4. You understand? Okay, this was where I was working with someone. So you can also get charts on MT4. Do you understand? So this is Euro USD. This is where it came. Euro USD. The time frame is 30 minutes. So this is what the market is doing on Euro USD. Let me zoom in. So each of these candles represents 30 minutes. Each of them, you can see the time down here, 1st of March 2022, 9:30. If you come to this one, it will be 10 a.m., 10:30. Okay, each candlestick represents 30 minutes. So that's just basically what it's about. So this is a chart, and you can change this from even USD to USD JPY. Let's do that. So USD JPY, and that is that. So you can see that you can change it. Easily type here and search. You can change time frame. So the time frame will tell you when the market is doing at a set period. It does not mean if you place trade on 30 minutes, it will close 30 minutes. I've been hearing that kind of those lots of questions like that. No, that's not the meaning. So you can change it to 1 hour. So you see how it will change. Okay, so these are lines which I've added some days back. So I hope this is clear enough. So each candle here now will represent 1 hour, since we've changed to 1 hour time frame. So you can check for anything you wish to check for here. So this is just what a chart looks like. So you can change it from candlesticks. You see the row candles. There are different types of charts. You can change to line to be represented by lines. You can change to bars, represented by bars. So the green represents for bullish. The red stands for bearish, like the market is coming down. The same thing for the candles. I prefer candles and I advise you use candles. This is reason why I said you should download candlestick. The green means going up, the red coming down. And so sometimes it can be white and black instead of green and red. So just use whichever color you prefer. Do you understand? So that will be it. I just wanted to show you charts and introduce you a bit to TradingView. We will be learning further as we go into the training. So we are back here. So margin call. Now, margin call is bad news. It's a situation where if you make mistake, your broker will send you an email that you've lost too much in your account and you have blown your account. So that is bad news. Sometimes they don't send email. I think they've kind of stopped it now. Before they used to send email a lot. So if you wish to prevent this, which is why I know you are in this training, ensure you learn till the end, and also get into mentorship, as that will make it easier for you to use profitable trade. So who is a broker? Now, a brokerage firm, you understand, is a company, so we look at it as a brokerage firm. It's a place where buyers and sellers go to buy and sell instruments such as currencies. Anyways, what it does simply is operate as a middleman between you and the forex market. So, example of course, in the next training we'll talk about brokers and creating accounts. But just understand that it's a company which you register with, you deposit with them as well. Because when you make profits, they will be the ones to pay you. Now, volume is another term in forex. It's just like the number of lots traded in the currency pair. Understand? They can say up to 3,000 lots are traded on Euro USD and the like. Just saying that to tell you the activity going on, okay? The activity going on in the market. So while we are talking about the basics, I think it is also worthy of note to mention executions. You understand? So it's simply how you place trades. You understand in forex. So there are basically two types of execution. There is market order. Some call it instant execution, which is doesn't matter. There's also pending order. You understand? So now market execution, that is instant execution. Market order, it means you place a buy and the market will execute it instantly, immediately. You understand? At the current market price, immediately, okay? Market order. So you place a buy, you buy, enter, you place a sell. That is, of course, on the MT4 app. So I know you might be asking, how do we do this? How do we place a trade? We are getting there, okay? We need to first of all understand terms, okay, and create an account, get the apps. Gradually, we'll be understanding everything. So don't feel lost, don't feel in a rush, okay? So if you place buy, it will execute it immediately. If you place sell, it will execute it immediately. So that's market order. Now, pending order, if you place buy and sell, it will not execute it immediately. So execute it at certain price level which you have given it the command to. Do you understand? Okay? You understand? So like buy stop, let's say the market is, let me explain these things to you. Although when we get to practical, you understand better. Let me start with buy stop. What buy stop does is that, let's say the market is here. With buy stop, you are placing a buy order that once the market gets high to a particular level, let's say level A, the market should enter, it should trigger a buy for you. This is also the advantage of forex, which is automation. Once you place this buy stop order, once the market gets to that place, the buy will be triggered and the market will start buying for you. The same thing as sell stop, okay? You'll be at this position, you will see that once the market goes down to level E, it should trigger a sell for you. Stop, you understand? So once it gets there, it's going to enter a sell. So even if you are not online, even if you've turned off your data, even if you've gone off, even if your phone has turned off or your laptop is dead, it does not matter. Once the market gets there, to trigger it for you, you start selling. You can see all these things automated. You're going for a party or you're going out for lunch, you're going to see a loved one and they say, oh, no phone, no business, no marketing, not to just focus on enjoying the moment. Good. That's fantastic. But with forex, you can still give it order while you are sleeping. Okay? So that's for stop orders. Let me explain limit order. Limit is kind of, they're kind of similar, but you still understand the differences. So limit order, let's say you are here. Now what buy limit does is that you're telling the market, okay, once you retrace down to point E, I am expecting you to reverse. So you place a buy at point E. As I say, once the market comes to E, you're expecting it to start going up. So you place a buy. So once it comes to E, it will enter a buy for you. If the market actually starts going up from here, you'll make money. If it keeps going down, you'll be losing money, remember. So, but don't worry, I'm sure you understand that we have stop loss to stop your losses and the likes. So there is also sell limit. Sell limit is the opposite. You are simply saying if the market goes up to point A, you should enter a sell for you. You believe that once the market goes up to point A, it will reverse. So you put a sell there. When the market gets to point A, it will reverse. And you are expecting it to reverse. So if it does reverse, once you get there, it will trigger a sell for you. So if it does reverse, you'll be making money. If it does not, well, there's a stop loss for you. So I think I did not include that in the terms. Stop loss and take profits. And take profits. So this is an advantage we have as forex traders. You can easily place a trade and then use stop loss. Of course, I'll show you how to do this. Use stop loss and take profits to automate it yourself. I talked about that in the previous part, but I'll talk further. Let's say you enter the market here at this current price level. Let's say it was at 1 point. Let's say it's Euro USD at 1 point. Okay, let's say we enter at 1.051 and you're telling the market, let's say you enter a buy, you're expecting it to go up. You can now put your take profit at 1.091. Okay, 1.10, okay, 1051, that would be 40 pips. If you do the subtraction, it is 40 pips. What you are simply telling the market is, oh, let's say I'm not around, I'm not available. I'll show you how to set all this in the practical class, of course. Let's say I'm not around, I'm not available. This is how you should carry out this thing for me. Okay, set it. Once it gets to 1.1091, take in my profits for me, add it to my balance, and close the trade. You can also put it in such a way that assuming you are wrong, because you cannot be right every time. You can be wrong sometime, and that is why we apply risk management. We still get there. So you can put a stop loss. Let's say your stop loss will be at 1.1041. That's 10 pips. I simply telling the market that look, if I'm wrong, let's say you place the buy, you put your stop loss here. Let's say you are telling the market, let's say the market is going, if you are going down and you are going down way too much, once you get to 1.1041, please take me out of the trade so that I will not lose too much. That's why it's called stop loss. You are stopping the loss. Okay? You stop the loss. You understand? So that's just like, so this exists is also part of the terms which you need to understand. You use it in automation. So even when you put this pending order, so this should be buy stop, not put stop. Even when you put this pending order, you can still put stop loss and take profit. So that even if the market, if you enter the market while you are sleeping, if it goes in your favor and get to, let's say 50 pips, 100 pips, you can take in your profits. Now, I know you might be asking, why don't we refuse to take profit? Why don't we just allow it go in our favor? Well, the market will not be going uptrend forever or downtrend forever. So if you place a buy, you want to take profit at a particular place. If you place a sell, you want to take profit at a particular place. So I will explain this better when we place trades. So I hope you are getting this forex class. So let's go on. Like I said, the free training will contain a lot. It will contain more than most paid classes you've seen out there. And I hope you follow us to the end. So continue and watch the next training. Welcome once again. This is Bfa FX Academy, where forex is made simple and profitable. If you have any question, ensure you send us a message on this WhatsApp number. Welcome once again.